this is the part that people have a very hard time understanding. You're down $500,000. It's not, I'm down $500,000. It's that $500,000 is no longer yours. It's not part of your universe. Let's begin again to make a $500,000. You have to train your brain to understand that. Let it go. It's gone. It's not yours. If you chase that money, I promise you'll lose more money. The first thing that needs to be done, in my opinion, like the first thing is to stop losing. Now, that sounds easier said than done, but the truth is that losing begets losing. It's very addicting. It becomes like almost like you expect to lose. Now, you don't go to trade to lose, obviously, but type of or a bigger losing streak, you start to think about, well, how is it going to go wrong? What's going to happen now? Well, this never works. And that actually plays into how you trade.
It is really amazing when, for our style, which is more, market dependent, swing trading, position trading, you're in a correction where the overall market's pulling back, breakouts aren't really working, our style isn't really working. But as soon as the market pressure lifts and you make one or two good trades, all the kind of negativity and what you're feeling to the correction where, hey, the style's just not working, is it ever going to work again, it can just flip like a switch. And like you said, once you've got that confidence back, you see things better, you can execute better, all of that.
But the one thing that I could tell my younger self, I remember people helping me, is that don't make excuses. Don't rationalize. Don't try to say, well, this happened to me. It was unlucky. I remember I used to say that, oh, I was so unlucky. That overnight was terrible. I wasn't unlucky. One night's unlucky. 5 months is not unlucky. Truth is, it's a marathon, right? You want to make a living at this job. You want to have a career at this job. You got to be able to stand the wins and the losses, and you're going to have the losses. And the most important part of trading is to be able to handle those losses.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. Okay, welcome back, everybody. It's my pleasure to introduce our next speaker today, Jon Brody. Jon is an extremely experienced short-term trader who has been focusing on risk and money management for over 30 years. He previously was at the Schoenfeld Group and currently trades for the Kirshner Group. And today we'll be talking and discussing an extremely important concept that I think everybody watching can relate to and has definitely gone through, and that is drawdowns. How to come out of them. He'll be sharing a lot of personal experience based on the largest drawdowns that he's been through, and be sharing a lot of practical information about how to overcome them. Jon, really looking forward to this today. I think as we kind of messaged back and forth previously, this is such an important concept and topic that most people, everybody wants to focus on the setups and the trades that work and all that. But overcoming drawdowns is probably one of the most important things you can do and master as a trader. So thank you so much for your time.
Sure, Richard. Thank you for having me. Yes, that's very crucial in becoming a successful trader. As you already said, I was been a trader short-term momentum for over 3 decades now. And over that time period, what I have noticed is that when things get tough, you have to be able to kind of right the ship. And I personally myself have had three drawdowns that have been significant. And they usually come after times of making a lot of money, being kind of on your highs, finding that, you think you're invincible type of thing. And then you get hit with this kind of drawdown and kind of, sends you on your way. But how do you get out of them? Like, for me, that's the most important part, because if you trade for a long period of time, you're going to have one. It doesn't matter what your style is. You can be a momentum trader like myself, who's a short-term momentum trader. I usually hold stocks anywhere from a couple hours to a few days. I'm not a investor. I don't have portfolios that are 6 to 9 months long. But I am based basically on momentum. So what to do when things go south? Well, personally for me, the first time that I had an issue, I would say, was after the internet. You had the big internet explosion, stocks were going all over the place, and there was money to be made. I mean, just you take a stock overnight, next day it would gap up $30, and literally you just had to press the keys and it looked like you were just making money. Everybody was making money. It was very, in my opinion, simple time to trade because it was very forgiving. Mm-hmm. I was about 30 years old at the time, 31 years old at the time, and things were going well. And then I would say 2 or 3 years later, the market started changing a little bit. And again, at this time, I didn't have a big drawdown yet. This is my first of 3. I call them the big 3 because I had 3 big drawdowns. And what happened was I would still trade the certain way that I was trading before, and it wasn't really working. And so I had this big, I would say, meteoric rise in a short period of time. And then I got hit with about a 10 to 15% drawdown. Now, all my drawdowns, when I say big drawdowns, are about 10 to 15% of what I made prior. I've had 1 or 2% ones, little ones throughout the time, but they didn't really affect my yearly P&L. I've had 3 losing years that are basically, out of the 31 years that I've been trading, from these types of drawdowns. These, I call them almost cataclysmic, but they're not. Like when you're in them, it feels like the world is ending, but the truth is, right. But the truth is that everybody is going to have them if you trade long enough. Like I said, I'm a momentum trader. I know mean reversion traders that maybe would have 1 or 2 bad trades that would put them in a big loss, and then have to kind of find a way to, I wouldn't say dig out because I don't like using that term, but find a way to right the ship and become profitable again. So my first one was during the internet explosion, the 2004 to 2005. It was about a 14-month period where I struggled. And I didn't lose every month, but I lost over that time period. I lost about 10 to 12% of what I made the prior 3 or 4 years, that from 99 to 2003. The second one was a little after the financial crisis. So in 2007 to 2009 and 10, things were, again, I had a very explosive move in my P&L. Trading was very good for me. And then in about 2011, things started getting a little rough, but not so terrible, just a little bit, right? And then, chopped around for a while. I would say, had, medium years to about 2016, where the second one of these kind of happened. The volatility kind of got sucked out of the market for the first time. If you remember, the VIX was down to around 10 and around that period, 2016-17 area. And for a short-term momentum trader like myself, I wasn't used to that kind of shrinkage and volatility. And it caused me to have another 10 to 15% drawdown of the time period from 2007 to 2016 that I made money. I drew down about 10 to 12% off all that P&L that I made. The third one, which I'm just coming out of now, being perfectly blunt with my audience here and telling them that I'm actually just emerging from it. This started, again, I had a boom time from COVID to 2020 to about 2020, late 2022, early 2023. And then I drew down about 10 to 12% again from 2023 to roughly, it was about 9 months to, I would say, so actually it was, take it back, I'm sorry, it was actually September of 2022 to around September of 2023. And since then, I've worked my way out of it and basically am even now from the, actually that one was 13% that I drew down from there. So what do you do? Okay. like I said, since it happens to everybody, how do you keep your bearings? Um, Personally, for me, it becomes a mental exercise.
Mm-hmm.
And what I mean by that is that, listen, when things are good, everybody's a superstar. And I don't mean that in a condescending way at all. I mean that everybody's feeling great. The P&Ls are going up. They're making money. They're buying fancy stuff, or maybe they're saving money, whatever they're doing. But trading is kind of an emotional business. So what's happening is that people are reaping the rewards of their hard work, but the guard's being let down a little bit because it becomes so easy. Maybe it's easier. They can't believe how much, the younger people who haven't had this seasoning and experience yet, they can't believe how easy it is. The older people who've been around the block a few times know that it's going to turn, but they kind of don't know when. And sometimes they also get a little bit, I would say,
Over exuberant.
unaware of the changes, right? There are small changes that happen in the marketplace that kind of your style has to adjust no matter how you trade. And if you don't adjust, your P&L will make you adjust.
Yeah.
So those are my three, I call them the big three cataclysmic drawdowns that I had. Again, they're roughly all the same percentage, between 10 and 13%. This one being 13, the one during the financial crisis. After that, 8-9 year period was about 11. And the first one was about 10 or 11 after the internet bubble. But if you've noticed, those all be, after times that were really good pockets of trading.
Right.
And I don't think that's coincidental. I think it's because, again, you're kind of a little looser, you're a little more aggressive. Maybe you get caught off sides. It's all kind of the same type of thing. But when it happens, it's shocking. I mean, there's no question about it. You start to wonder, can I get out? How am I going to be able to become profitable again? How am I going to be able to, maybe I'm not seeing it clearly anymore. How am I going to be able to begin to see clearly again? And there are certain steps that actually work. And because call myself kind of the expert at this, of turning the ship around and becoming profitable again, I'm here to share some of my wisdom. And the good news is that when it does happen, and trust me, it will happen to you. I promise, if you've been here long enough, even the greatest traders in the world, guys that manage multi-billion-dollar portfolios, it happens to them. They draw down too. Just as a professional athlete, a baseball player bats 186 over 30 games. I mean, these are guys that are professionals. I mean, they're the best in the world in what they do, and they still slump. And so it's kind of the same type of, I would call it the same type of skill set. You have to work yourself out of it. A little more mental, obviously. Going into batting cages and taking practice cuts is not going to help you trade out of your trading slump. But understanding why you're slumping and getting a different mindset and how to kind of turn the boat around, that will. So the first thing that needs to be done, in my opinion, like the first thing is to stop losing. Now, that sounds easier said than done, but the truth is that losing begets losing. It's very addicting. It becomes almost like you expect to lose. Now, you don't go to trade to lose, obviously, but when you in a little type of or a bigger losing streak, you start to think about, well, how is it going to go wrong? What's going to happen now? Well, this never works. And that actually plays into how you trade. Right. Subconsciously, you don't realize it, but you trade differently. You become more skittish. You don't hold your positions as long. You don't maximize your profit. You chop yourself up. You trade in and out because you can't hold the position because you're too worried that you're going to lose. Or you hold on to losers because you don't want to book another loss. So you turn around and you hold on to that and it becomes a bigger loss. And what happens then? Well, that bigger loss that you're stuck in, now the opportunity cost is that you're missing all the other trades that you would have made money in that you're not looking at because you're too busy staring at the one you're losing. And when you chop yourself up, or you're too busy getting in and out of the same position, you're not letting yourself reap the reward of your confidence. And remember, you've been trading a while. You know you can make money at this job. You've proved it time and again. What the trade you're putting on is probably going to work if you give it time. But since you're kind of so worried that you're going to lose, you don't give it the time. And so you buy it at, these are all obviously arbitrary prices. You buy it at $100, it goes down to 98.50. You're like, oh no, I got to get out of this, even though your stop's maybe 96.
Right.
And then you turn around and you buy it back at 100 spot 95, and you're paying up 95 cents. Oh, see, I'm right. I got to get back in it. So it becomes kind of like a cycle. You basically get on a hamster wheel where you're chasing bad prices. And unfortunately, that happens to a lot of traders, especially short-term ones, and especially when they're losing. So the first thing you got to do is stop losing. And how do you stop losing? You know, Richard, people will say to me, well, that's easier said than done. I'm losing money. You're telling me just to stop. Well, actually, it's not that hard. One winning day. I don't care if it's $500. I don't care if your average day. So for me, if my average day is anywhere from $30,000 to $50,000, and I'm losing, and I'm having a losing month, and I've had 6 or 7 losing months out of the last 10, and not big ones, just kind of like losing and just not being profitable or not moving the needle or just being breaking even, $1,000. I make $1,000 that day. That could be a start of me trading out of this bad kind of slump. Mm-hmm. The truth is, it makes a big difference mentally. Even if it's $500, just leave with a win. So if you're on a short-term losing streak of a few weeks, one winning day. If you're on a longer-term losing streak, let's say like what I've been, the 3 that I've been on, a winning week. And then, you know what? I just want to make money this month. I don't care if it's $9. I want to make money this month. I want to stop the bleeding. Okay? That's the only thing that matters. Stop the bleeding. Let's stop losing. I'm not worried about making that money back, because this is the part that people have a very hard time understanding. That money's gone. That's no longer your money. You're not in debt. So if you're down $500,000, it's not I'm down $500,000. It's that $500,000 is no longer yours. It's not part of your universe. Let's begin again to make a $500,000. You have to train your brain to understand that. Let it go. It's gone. It's not yours. If you chase that money, I promise you'll lose more money. If you're worried about being down, oh, I'm down 460, or I'm down 500, or I'm down 520, whatever the number is, you make back 60,000, you're going to say to yourself, oh, I'm still down 460. Instead of saying, I'm up 60. And you know what? It's kind of just 2 ways of saying the same thing, but one of the ways is positive and one of the ways is negative. And the positive way really helps you in the mindset to be able to build again, because that's what you have to do. You basically have to build again. Yeah. And it's important because once you do and start getting that confidence back, because again, with what I do, short-term trading, momentum, even mean reversion, if you do that way, but any short-term trading is very based on confidence. You know, I don't have a fleet of analysts analyzing my positions. I don't have, you know, I'm not holding stocks for 6 months, 9 months, a year, and having people on the board, or that's not what I do. I am a short-term trader. Okay, my job is to extract money from the market in a short amount of in a short time period. Okay, and be able to make that money to put it in my pocket. That's it. That's what I do. It's simple. It's not rocket science, but you got to have the proper mindset for it. And if you don't have the mindset, it's not going to matter what your technique is. Again, I don't care how fundamentally sound you are as a trader. If mentally you're not kind of in the mode, so to speak, or you're not going to be able to make it. It's not funny. You're gonna sabotage yourself. So that's the first thing. We're gonna stop the losing, right? And after we do that, and we're gonna put a couple of months together of wins, or a couple of weeks, or whatever, start getting our confidence back. Also, what's important in this time period is you cut your size. You trade smaller. Again, the process here isn't about the money. The process we're looking for is to stop losing, is to get back to break even and making money and slowly walking up those steps to profitability again, right? You took the elevator down. Now you got to walk the steps back up. There is no elevator that goes up. Doesn't happen. There isn't there. There's no quick answers. You're not going to hold a stock overnight and make $70 in it and be back. Okay. If it happens, it's a lotto pick. You know, you're better off playing like I said, going to the casino and putting it on black, or playing the lottery, whatever. But if you want to be a profitable trader and turn the boat around, so to speak, it's a slow grind back. But here's the good news about that. you set your mind for that, it will be quicker than you think, which sounds crazy to say because it just shows you how slow of a grind it is. But if you put yourself in a position where you're just trying to kind of grind out money, you're going to have that day, whenever it might be. It could be soon, it could be a little later, but where you make 5x what you normally make. So if you're grinding out tens, all of a sudden you're going to make a 50. You're grinding out $1,000 or $500, all of a sudden you're going to make 2,500, and you're going to use that momentum and use that confidence to continue to help you trade kind of profitable again and put winning months, weeks, months, and years together. And that's really the first step.
I just want to jump in
Sure.
and because it is really amazing when, we for our style, which is more, market dependent, swing trading, position trading, you're in a correction where the overall market's pulling back, breakouts aren't really working, our style isn't really working. But as soon as the market pressure lifts and you make one or two good trades, all the kind of negativity and what you're feeling to the correction where, hey, this style is just not working, is it ever going to work again, it can just flip like a switch. And like you said, once you've got that confidence back, you see things better, you can execute better, all of that. 2022 for a lot of our style was just a long slow grind down where we didn't have any uptrends. But when that turned around and things started working, you remembered that you can do this, that you can find the right stocks, you can identify the leaders, and it was just kind of market dependent. But as you said, it's all about that confidence and that mindset shift and thinking the right way. So yeah, I think that was an excellent point.
Yeah, and again, like I said, my losing streak, like I said, started kind of like that second half of 2022,
Right.
almost in like in the last quarter. It started getting very, in the first 6 months were fantastic. Things are going great. I mean, I want, I'm going to show a chart. Just give me a second here
Hmm.
of my P&L. So yeah, let me share this with you guys kind of here.
Yeah, and just for kind of perspective, your style, you thrive on volatility. So a very volatile market for you is opportunity. For our
Right.
style, for many people watching, it's almost the opposite, where we're looking for those trends. So periods where you might be trading well might not be the best periods for us, and vice versa. And it's like that for whatever style you're using. There's always going to be good periods and bad periods.
Absolutely. And listen, to the people watching, okay, I don't sugarcoat my trading. All right. For me, I'm not going to sit there and tell you that I'm the best trader on the planet. I'm not going to sit there and tell you how I make all the money. I have been doing this for 31 years, so I've done okay. But the truth is that I also have, I have leaks. I have mistakes that I still work on to this day. I'll be 54. All right. I started trading when I was basically 24, and it's still a learning process for me. So you never have it solved. So basically, this is a chart of if you guys can see it, I think you can,
Yeah, it's up.
of when I started when I came over from when I came to Kirshner in the summer of 2019. And if you can see how you started off, this is to scale. So I kind of the P&L is not important. What's important to me is kind of the direction of what's going on. So you can see for the first few years up until about, like I said, the second half of 2022, where I was, basically having little dips, making new highs, kind of like a nice looking stock, right? A nice stock. And then I kind of had this little drawdown here in this spot here. And as you can see right now, I'm back to basically my high watermark or where I was back in
22.
20, right, mid 2022, just about there. It's taking me about, if you look, my kind of low was October, September, like I said, August, September of 2023. And since then, so about in 10 months, basic time, last month I basically was about flat. So 10 months time period, I was able to come back to basically my high water there. So, so basically, so if you look, you had that time period where I was kind of riding the ship. I had the pullback, and then I was kind of flat. I was kind of almost sitting there. Now it was over a few months, but it was kind of like making a little, not really getting, stopping losing that first step. It kind of look like a chart that's spacing out. If you have a stock and it's flagging out, it's spacing out like that, and then
Yep.
it starts moving up again. That's kind of like how I feel when you're kind of in a drawdown. You got to have to trade. You have to stop the losing, find a way to, get that confidence back, and then, start trading, from a position of strength, and the confidence since you're trading from a stronger position, it becomes easier to make money. It's very hard to make money when you're trading from basically behind the eight ball, from a position of weakness. It really affects you. It really it does a number on you. I mean, it's hard to, if you think about it, to, I mean, for all people who played sports, I played sports in my life, so for me it's easier to use an analogy for sports. And I played some poker, so it's easy if you use poker as well. I like to use those analogies too. You go and you're playing poker tournaments and you find yourself that you're just constantly bubbling, or you're constantly just min cashing, or you're not making money at all. You can't seem to get the money. Or if you're playing sports and you play basketball and you're shooting 3 for 12 every time you go out there, and or your free throws, you're 4 for 11. You're just not making, you're not doing what that you've practiced and you are capable of, but you're just not doing it. It's just not happening. That's all the mental aspect of it. I mean, sure, sometimes, if you're a golfer or you're, like I said, baseball player, sometimes, maybe you're doing something wrong that's causing you to do this. Maybe, your swing is not the same. It's, dropping your shoulder or doing something, whatever. It doesn't matter. The point is that though, mentally, when you're mentally strong and you have the confidence that you can go out there and you can hit that shot, or you can get on base, it does wonders. It literally, you become a better player. It's the same thing with trading. You become better. You thrive on that. You build on that. You hear a lot of these, trading psychologists. They talk about this stuff because the truth is it's important. Mm-hmm. It's just, in my opinion, trading is 95% now. In my opinion, it's the mental aspect that's more important than your technique. Sorry, it's just that's just how I feel. I've met people in my life, hundreds of traders, and they all have, and lots of them have all different styles, and and they make money, and they do nothing that I do. They do the opposite that I do, or they do something completely different. I don't care. I don't care how you trade. Mentally, you have to have the same kind of mindset to be a winner, and that the truth goes really for any type of competition, in my opinion. So we covered basically how to stop the losing. We covered what to do. I kind of showed how I've traded out of it. Then the last part, the third phase of this, is like the begin a new phase. So now you get your confidence back. You stop losing. You put 6, 7 good months together in a row. Then you're feeling, you're sizing up a little bit. You feel like you can, you obviously the losing time period is still in your mind, so you're not reckless. But you realize that you're kind of out of the hole, and you see, terra firma is right in front of you, and now you begin anew. And basically, you take what you learned from that time period. And again, like I said, I've had 3, and each one's been a little different than the rest. This last one, I think, has been, for me, the easiest, even though it was 10 months, but it was 10 months of me making the money back, so to speak. It took about 3 or 4 months, 2 or 3 months to right the ship, I would say. And again, that's my high watermark, not to become profitable. But the second one, the one that was kind of, so you had the financial crisis from 07 to 09, and then I was profitable to about mid 16, and then I had that trouble. It was basically May of 16 to October of 17. That to me was my hardest one, because that's when the market conditions totally changed, and I wasn't used to that change yet. Right. I never traded in a volatility index that was 9, really ever. So I had to kind of learn a new style, so to speak, a new skill. So that one was the roughest for me, because I literally had to fundamentally make a change. But this one, again, the volatility index is lower. VIX is 12, so it was still kind of low, volatility wise. But because I had the experience of the last one, what to do in these situations, be more stock centric. Don't trade market, trade, go where the action is in stocks. Stay, because I also trade futures. Maybe stay away from futures because they're very choppy and whippy. The the money's in the names of the day, the money's in the names of the week, your Nvidias, your Apples, your stocks that are breaking out the AI plays.
Right.
That's, I learned that from my second losing period. As long as you can take something from every hardship that you've had in this business, then I really believe that you'll be able to last. Because the truth is, it's a marathon, right? I mean, it doesn't matter if you have one, unless like I said, are playing the lotto, you have 1 or 2 good years. I mean, that's not going to cut it. You want to make a living at this job. You want to have a career at this job.
Longevity.
You got to be able to stand. You're right. You got to be able to stand the wins and the losses, and you're going to have the losses. And the most important part of trading is to be able to handle those losses. Because I've seen talented guys just leave the business because they just couldn't handle it. It just got to the point where they were like, I can't do it anymore. It's just too much for me. It's too much stress. And they quit. And they were talented. But they didn't have the fortitude to be able to trade, to be able to kind of start again. Right? I mean, I'll be honest. Listen, I'm a little extreme in that direction. So for me, I have a little more fortitude than most, I would say. So I'm a little more gritty. But the truth is that you need to have some, because like I said, when it happens, and it is going to happen, you got to be prepared. And I'm hoping, having these conversations and having this interview, that these traders, when it does happen, that they're able to say, you know what? I remember Jon Brody. I remember his interview, what he said. I remember he was talking about, slowing down, cutting the size, righting the ship, just getting profitable 1 day at a time, then 1 week at a time, then 1 month at a time. And before I know it, I'll be okay. And that'd make me happy. You know what I'm saying? Basically, because in my mind, I'd be saving one trader's career instead of them throwing a towel and saying, I can't do this shit anymore. Excuse my language. I just can't do it. It's too much. They'll be armed with the knowledge that they're not the only ones who's been through this. Yeah. That most are through this. Most guys that have been around for decades have gone through tough pockets. Listen, I know guys that had $1 billion hedge funds that have lost 10, 15%, that have gone through hard times. They just turn around, they rebuild themselves. And listen, the financial markets, stories are littered. They're all over the place. Don't believe me? Google them. I mean, they're there. Yep. Even some of the most well-known hedge fund guys that people know, that they're household names, they've gone through the trouble. They've gone through that. It happens.
And jumping with the question,
mm-hmm.
you've mentioned, stop the bleeding, cut the losses, and then, cut your size as well. Is there anything when you're in a drawdown that you do kind of outside of trading to help rebuild that confidence, help rebuild your psychology as well? That's not completely trading related, but
sure.
Everything comes together. So everything's related.
Sure. So positive routines, right?
Mm-hmm.
Journaling, trying to write down, because the truth is that when you're in a losing pocket, let's call it, okay,
mm-hmm.
things get blurry. They just do. I mean, you just don't remember all the bad mistakes you made. You don't remember the maybe over trading or the ill-advised D trade that you shouldn't have put on. You just don't remember them. Everything kind of blends in. It's kind of, it's again the concept of tilt. I discussed this in, I believe, my last interview that we had. Tilting is kind of scary because you don't know, most people aren't aware when it happens. So when you tilt and you basically are in that fog, I call it, like the fog, you don't really remember what you're doing. You're kind of on autopilot.
Mm-hmm.
And you kind of mushing buttons, and maybe some people who trade super fast, they start just throwing multiple trades out there. For some people who are skittish, they don't trade at all. But whatever it is, it becomes extreme, right? So when you're tilted, you're not thinking of really the minute to minute, second to second decisions. Everything just blends together in one mishmash, and that's really the most dangerous time for a trader. So how do you make sure it doesn't happen to you? Well, again, when you're in the losing streak, you're kind of there already. So how to get out of it? Journaling is a very good thing.
Hmm.
I'm also a big proponent of walking away from the machine. I've said this before. There's no reason why you should sit there and stare at that thing for 6.5 hours, especially when things are not going well. It just becomes in my opinion, becomes reckless. Some people might say, well, you got to be there, you make sure what's going on just in case. Remember, though, if you're not in the proper mindset, you being there is not going to help you. It's going to hurt you. Because for someone who is focused and confident and is trading well, they're going to see things a little differently than someone who's muddled and tilted and in a losing streak.
Yeah.
Even if they trade the same way, you know, the confident guy is going to be like, you know what? That's not the trade. I'm going to wait till it sets up. The tilted muddled guy is going to be like, you know what? That looks good. I'm going to get in that thing and just get in it. Or, you know what? Even though it's a good trade, I don't trust that. I'm not going to do it. It's both ways, right? That person is not seeing things clearly. So there, like I said, what can you do? Journaling is one. I believe walking away from the machine, especially during the middle of the day, if you're a day trader or a short-term momentum trader, middle of the day is very trappy. Unless there's some kind of news catalyst, I think it's a good idea to kind of maybe you want to take 30 or 45-minute lunch break or walk around or stretch, do some exercise, whatever it might be. I think that's good. I think exercise is good. I think even if it's walking or whatnot, kind of get that, the juices flowing, make sure your mind works better when you're moving around. Um, I think all those things, physical and mental stimulation to help you is that all helps. That's all, part of the routine and having a routine.
Yeah.
Get up at 8:30, get up at 7:30, get up at 6:30, whatever time zone you're in. If you're a news centric trader, read the news, find out what you're looking for, set your game plan up. You do the game plan the night before. If you take overnights, have a game plan for the next day. If you only day trade, have a game plan for that day. Have a routine. Set into that routine. That helps. That because the more regimented and the more discipline you have when things are going not good, not well, the better chance you have, and the quicker I believe you'll have of getting out of that situation, bad trading.
And is part of journaling kind of tracking that drawdown, or does that kind of almost emphasize it too much? And what I mean by that is, if you're kind of journaling very regularly and you're monitoring your equity curve, you can hopefully start to notice changes where, all right, I'm kind of entering a drawdown here before it gets too exasperated, before it gets down to that 15%, 20%, 30%. Is that part of journaling for you? And yeah, I guess kind of what are your thoughts on that aspect of things?
So there, I don't write my P&L down when I journal
Hmm.
because to me, I know people that do, but for me, it's not necessary. I'm not looking. If I want to see my P&L, I'll just pull up my account and look at it. And, when things are bad, start crying. You know what I'm saying? I mean, what I'm saying is that I don't need to be. That's not the really important part of journaling. I'm journaling to look at my trades later on when I'm out of the game, so to speak,
Yeah.
and having a bird's eye view and saying, why did I make that trade? Or why didn't I make that trade? Or was that what was I thinking? What wasn't I thinking?
Hmm.
Put myself in a situation when I'm removed from the actual action, so to speak, or the situation, and be able to make a more cognizant approach to the next time it happens. I'll look at my journal. Oh, I remember back on May 18th, I didn't make that trade. It sets up kind of the same. I didn't make the trade. I wasn't confident. But it was the right trade. So you know what? I'm going to make that trade. It's the right trade, and I'm going to journal that. It's just a thing. So I think that's the benefit of journaling.
Gotcha.
To be able to look back at your history, so to speak, and read about it and understand where things kind of, it's almost like hand histories. If you play poker, writing down hand history so you can go back to the hand history and take a look at it and see, I took this line. Why? Was it the right line to take? Is that why I lost money that session? Or, just get unlucky? I mean, listen, look, this is extremely important for me to stress
Hmm.
to the listeners. You're going to, like I said, you're going to lose. Okay. There are some people that lose less than others, but you're going to lose. It's good. You're going to get hit with the frying pan. And when it happens, you need to be armed with the tools to be able to right the ship. Because I know guys that didn't lose for 20 years and then lost, 25 years and then lost. I get you. This is not an exact science. It's close. Don't get me wrong. It's not gambling. I mean, you're a good trader. You earn year over year. You have a talent. You have a trade. You know what you're doing. Okay? That's not luck. But sometimes, we're people. We're not machines. And sometimes you may make a trade that might send you, off kilter. You may get unlucky. You may have a position overnight or during the day that gets halted, and somehow you just some crazy news, black swan event comes out, and you get stuck in it, and it affects you. I mean, it can it affects you for the next month or 2 or 3 months. The quicker you notice it, the shallower your pullback will be.
Right.
The quicker you take the reins, so to speak, and you are able to understand what's going on around you, the faster you'll be able to recognize, right the ship, and become profitable again. But don't bury your head in the sand. Don't make excuses. I try to help. I help a few younger traders. I try to, at least. And when you're young, obviously, sometimes you think you know it all. Sometimes you are eager to listen. I think it's a combination of both, especially when things go well. But the one thing that I could tell my younger self, I remember people helping me, was that don't make excuses. Don't rationalize. Don't try to say, well, this happened to me. It was unlucky. I remember I used to say that. Oh, I was so unlucky. That overnight was terrible. I wasn't unlucky. One night's unlucky. 5 months is not unlucky.
Yeah.
Trading poorly. I'm not trading like an hour. Doing all the wrong things. Got to make a change. And the sooner you find that out, the sooner you realize that, better off you're going to be. And it's going to be shallow. Because the idea is to make your pullbacks shallow. Okay, 10 to 12% is not that shallow. It's 2% shallow. You know what I'm saying? I mean, you make $1 million, you give back 20 grand, 30 grand, who cares? Make $1 million, give back 300 grand, that's 30%. That's a problem. You know what I'm saying? That's too steep. You don't want that. My 3, I think, are somewhere in the middle. They're not shallow, but they're not trenches either. They're
Right. And when you're making the transition from the kind of, all right, just one green day, one weekday, one green week, one green month, to the begin a new phase, how slowly do you adjust your expectations and your position sizing and how much you're risking?
Okay, so that's a good question.
Yeah.
I'm a little atypical. And what I mean by that is that the way I trade, and people who know me can probably attest to this. When it goes well for me, I can ring the register pretty fast. Like for me, it doesn't take long. Like once I get a kind of once
That
I start
shift is quick.
right. Once I start seeing it, I can make it quick, really fast. But because my style is basically pressing when things are good, I put the pedal down, and when things aren't so good, I try to kind of ease up on the pedal and make sure I don't, and again, the biggest times that I have that are most dangerous for me is when the pedal is down, I've made a lot of money. So if I make a lot of money and then the pedal's still down when things change and I don't catch it quick enough, that's the give back. That's that 10% that I'm giving back. You know what I'm saying? I kind of get stuck in that high gear. So for me, it doesn't take long, so to speak. But I think it wouldn't take long for others either that are armed with this information, because one green day turns into 6 green days, turns into 12 green days, turns into 2 to 4 green months. And I'm telling you right now, you look back and all of a sudden you see that you have 85% winning days. And you're like, whoa, like I wasn't even paying attention. And that, I think, that can happen for anybody. I mean, I think it doesn't take that long to right the ship. What it does take, to make the money back, I should say. But it does take a little longer to get in the mindset to make the money back. Am I explaining myself there kind of clearly? I'll try to put it another way. To actually turn the ship around, the battleship, takes a little longer period of time. But once you turn the ship around to get to port, does not take that long. I think that is kind of the crux of it. And again, I think people who notice that and know that can not fear when it's going to happen. Now, I'm not saying they should sit at the edge of the desk. Oh shit! John says I'm going to have a losing year, or I'm going to have a losing month, or a losing. What am I going to do? I'm not saying that. Maybe you're special. I don't know. Well, I doubt it, but maybe you are. Maybe you never lose, but you probably will. And when you do, like I said, especially if you're a beginning trader, the experienced traders, I think, know this stuff already. You know what I'm saying?
Yeah.
Unless they're an experienced trader who never lost before, in which case that might be a little harder because now they're like, what the hell? I never lose. What's going on? But this is more for younger traders and traders kind of, maybe I would say mid-career traders, people trading between 5 and 15 years that maybe haven't had that losing cycle, let's call it. It's like a bear market, right? It's like a bear market for the stock market. It's a bear market for your account. Bear markets end. And, you just got to make sure it doesn't turn into a crash. That's all right. I mean, you can have a little pullback. That's fine. I mean, it's going to happen. Make it shallow. Get a 2%, 3% correction. Don't make it into a 39% market crash where you're out of the business. Because when things get rough, your job is to make sure that you're still around when things aren't rough anymore. And the only way to do that is keep the powder dry, right? And make sure that you're not, you're able to stop the losses, regroup, slow down, make the transition, and begin it now. And that works. I promise, I swear it works.
Yeah, for sure. Oh, please.
I'm saying I've been through 3 of them. I know it works, and I've come out every time more profitable than the next. So to me, I mean, you're learning. It's a learning period. It's a period of awakening, right? You're learning why that happened. What did I do? Did I adjust in time? Was I just plain stubborn? Was I chasing? So many different things, but with the journaling and with slowing it down and kind of seeing what's going on around you and writing the shit, you get all that information. So the next time it happens, and again, I think it'll be, usually shallower. It's not as pronounced. The first one's usually the worst. I'll be honest. And the first one's usually the one that hits you out of left field, especially if you're young and super successful. Like if you're killing it, you started trading, you're trading 5 or 10 years, you're making millions of dollars. You know what I'm saying? And then just, get hit with the anvil. That's the one that's the hardest because then you start questioning, like, did I just get lucky? Is that all this was? I mean, you got to realize it's not luck. You're a profitable trader for a reason.
Yeah, and I actually wanted to bring us back to your first big drawdown and kind of what you think caused it. What were you kind of?
Well, I know what caused it. Okay.
Yeah.
I mean, hubris is what caused my first drawdown.
Yeah.
I mean, it was 1999. We had the internet days where stocks were just. I mean, it was like Disney World. I mean, you took a stock overnight, a gap of $20. Didn't matter what internet stock you took. These companies, they had no earnings. They were doing nothing. They're shells, but it didn't matter because they gap up $20 next day. You'd make money. And then even better was when they fell apart. And then as it went to 800 from 5,000, to me, that was even better because I mean, it was like just stocks were just melting off the page and you just couldn't help pick up the money. It was just everywhere. And it's funny because when that was happening, you saw a lot of people who probably shouldn't have been trading. And I'm not saying because they're more talented, just because it was easier to make money. It just was. That changed. Volatility dried up. That fun time disappeared. I thought I was going to be buying a plane. I was 30 years old. I was ready to buy a plane, and that plane crashed. I mean, plain and simple. I hate to say it, but I got a rude awakening. I was realized that guess what? Yes, I'm a talented trader, I believe, and I take my craft very seriously. But maybe I was also a little bit fortunate of the environment, and I got sloppy. I got, like I said, I didn't think I thought I was the next great Jesse Livermore, and I didn't have to do any, the proper work, and I got smacked. And that's exactly what happened the first time. Second time, I think, was more of a situation where market dynamic changed over time.
Yeah.
I mean, it didn't happen like my losing streak in '04. That area kind of happened a year or two after that whole internet stuff. Um, After the financial crisis, when I made the money and I was still making money steadily, that was more of a grinder. Like I made a lot of money, let's say from '07 to 2010 and 11, and then slowly my earnings were declining, but I was still profitable.
Yep.
And then the market kind of had a change, a switch, and I just didn't. I wasn't able to. I didn't adjust my trading style in time, which caused me to obviously start losing, and then it's caused me to question even this. And again, it wasn't as steep as the first time, and it wasn't as severe, but it started me questioning. Has this game passed me by? Because remember, I was already in the business now over 20 years, so now I'm thinking to myself, maybe what I do doesn't work anymore. Made some changes in my trading, realized how to trade in that type of environment. So when that type of environment happened again, which has been the last 6 to 9 months to think about it, and I've been pretty profitable since then, I was armed with a new tool in my toolbox, and I was able to navigate this one, which has been the shallowest of the three. Even though percentage-wise it was around the same, time-wise it was, like I said, very shallow. It was really 6 months of so let's see, it was September, things started going well again. It was end of June, so October. So it was about 6 months, 4 or 5 months of like just not being able to make money and losing actually. 2 months of probably losses that were most of it, then 2 or 3 months of losses that were kind of like bouncing around zero, but still losing. Like, if again, these are hypothetical numbers. I'm just gonna throw them out there because they're round. If I was losing 100,000 during losing months, the 3 losing months and 4 losing months, I lost 100 grand. Then the next 2 or 3 months, I lost 10 grand. You know what I'm saying? Like it was, and then became profitable over the next months to kind of. So the actual losing session was only 6 or 7 months of not making money, but instead of like the first time it was like 14 months, I think, and the second time it was like 9, 10. Of kind of bouncing around, not making money. And then this time, like I said, it's been the shallowest because I'm armed with knowing how to trade out of it.
And you can trade out of it.
For sure. There's no question about it. There's no question about it. I mean, when it's happening, you start questioning yourself. You start saying, what the hell? This is ridiculous already. But when I sit down and talk to myself about it, or I'm looking at my journal, or I'm really focused on what's going on the weekend, because I do try to replay all my trades and go through my day that day after I'm done. And then I think to myself, I'll trade this. I'll be fine. I just have to make sure that, it's going to be probably 2 steps forward or 1 step back. And that's the best way. And then when I'm not looking, which is how it always happens, all of a sudden, like this time around, I have to draw down again from the end of June of 2022 to October of 2022, and then I made most of the money back to about mid 2023, and then I started going back down again. So I was kind of in that area, back and forth. And then from September of 2023, so it was that right. So it was about, let me see. So it was 4 or 5 months of losing. Then I made money back the next 5 months, and then the next 4 months was kind of chopping around again, but not really getting anywhere. And then from September of 2023 to now, I made money back. And the funny thing about it is the first few months were small. And then all of a sudden, the last few months were big. And that's the way it works usually. I mean, usually it's kind of back-ended where all of a sudden it's boom, boom, boom. Because you got the confidence. In the beginning, remember, you're just trying to put a winning. That's what you want. So once you get that winning month in, now, it's a little different. Now you're able to kind of, be a little more aggressive. You have a little more, the collar's not so tight. You know you can do the job. And you get a little more confident, and the numbers just naturally get bigger when you do that. Again, though, you need to be careful, because that's exactly when the guy is out there waiting to hit you on the head again. Yep. You start getting a little loose. Believe you me, it doesn't matter. It's right around the corner. It could happen. For me, that's my general weakness, I get fast. Everybody's a little different. Someone else's weakness could be that they hold on to positions and get stubborn. I'm not a stubborn trader, never have been. To me, it costs way too much money holding on to something that's not good. I miss things that are good, and I'm stuck in this, load of crap that's not going to make me money. It's only going to cost me money and cost me missing trades. So that's not my thing. My weakness is I get speedy. I get, kind of stuck in, I would say, high gear and slow myself down. And again, I have no problems being transparent with my trading. This is my journey. Like I said, it's 30 plus years. I plan on being 30 more. I don't plan on ever retiring, ever, just so we understand each other, ever. I am a student of this. I plan on doing this until my fingers don't work anymore and I can't press the keys, and then I'll talk into a little box and tell what to do by then. Make no mistakes. This is a job that if you, put the dedication in, it can be a very, very rewarding life. It's work. It's not, people think especially young people, that it's just an easy game, that you just do this, do that, and money comes in. It's not. It's a grind. It's tough. And you talk to anybody who's been in the business for, 2 decades plus, and they're going to tell you that, you better keep learning. You better keep understanding that put your ego at the door, check it. Don't let it come in. Don't let it bleed in. Don't let it seep into your trading. Okay. Because that's when the little losing guy is just waiting to hit you. He's there like a little gremlin, just waiting to get in there. And believe you me, when he gets you, you got a whole other, you got to deal with this. That's where I come in, help you.
Yep.
Get you out of it.
And you mentioned Jesse Livermore's name, a while back. And if there's anybody who's a great example for drawdowns and how the mental side of things can impact things, obviously it's personal life.
Look at much talented. Look at much talent they had. Listen, history is littered with people that had immense talent. Immense, like almost like, and again, I'm not one of these people. Okay. I'm not one of these guys that just have the, I think I'm a good trader, but I'm not one of these guys that's a savant or, like a maestro, so to speak, that, or the Mozarts of the world that just, are born and automatically unbelievable. I had to work at becoming, successful at what I do. But history's littered with people that had that talent and just didn't have the mental aspect of it. So that was it. They never made it, or they were, flash in the pans or short-lived. And it's a shame, because I think that in today's day and age, there's so many more tools and ways that people can kind of learn and realize they're not alone in this. It gets to a point where people start saying, and again, suck, I can't do this. Everybody else is making money but me. The truth of the matter is, no, everybody else is not making money but you. Everybody goes through this. What I'm saying? Learn from the people that have been there. And when it happens to you, you'll know what to do. You'll know that it gets rough and it gets a little tough, but you'll survive and you'll be able to thrive and move forward and become even better than you were before it happened. The interviews that you do, it's great. They're fantastic, because people get to see what minds are thinking. Other people, like, I treat nothing like Stan Weinstein. You know what I'm saying? Even though, I grew up around the corner from him, but I treat nothing like him. I'm not that kind of guy. There are other, Ross. I went to high school with Ross. I treat nothing like him. I love Ross, but I don't treat it like. He has a completely different style than I do. But I believe that we all have the same type of mental approach, right, which can fit any style. So to me, that's the one thing you have to really master. Master that, then no matter how you trade, no matter what situation you're in, good or bad, you'll be able to navigate the waters, and you'll be able to move forward and grow and become, if this is what you want out of your life, and you want to be a trader of any type. Again, short term, swing trader. Maybe you want to manage, multi-billion-dollar portfolios. Obviously, different skill set, different aspect, but mentally it's not different. what are you gonna do if you run a hedge fund and you draw down 7%? I mean, 8%, 10%. I mean, you may lose some clients. I got a friend of mine who I know that successful guy, young kid, I mean, super successful, super smart. And when he was just started off, he had a humongous, with no fault of his own, basically like drawdown in his fund. It was enormous, and he was very young. And I'm like, and I had to talk to him, and I'm like, listen, I'm like, it happens. Be happy it happened to you at this age, and not at my age. And he's even bigger and better than ever. This guy's a superstar. So you look at stuff like that, and you realize that mentally, it's really it fits all. The mental part is definitely one size fits all, no question about it.
Yeah. And you mentioned the interviews I've done. Every single successful trader who is now making triple digits or whatever it is, having some success, they've all gone through drawdowns, that they've all
Every
experienced
one of
this.
them.
Yeah.
All of them.
And one of my kind of favorite takeaways from what you said here today was you kind of positioned it as every large drawdown that you've gone through, you've gained a tool, you've gained more awareness and improved.
Oh, for sure,
And
absolutely. Because
yeah,
and the truth is this: the truth is that the most beneficial thing you learn, you could feel it start to come on, like it's coming. Like what I'm saying, like you better slow down. Listen, you've been here before. This is that little feeling. It's coming. Slow down. For me, it's slow down. For
yep,
other people, it might be something different. Slow down, put your foot in take it off the gas a little bit. You know what I'm saying? You're starting your swings are getting a little bigger. Things aren't working as well. Slow down. And
yeah,
I implemented some rules myself to enable that. For example, one of my rules that I use, that if I lose, if I have, I lose X amount of money or I have 3 losing days in a row, I won't take overnights at night. I want to start new. Let's
hmm,
start the next day new. Because I take overnights 99% of the night. I'm not just a day trader. I'll take stocks for a night, 2 nights, 3 nights, some option positions. I don't swing trade very often. Very rare. I hold anything 1, 3, or 4 days. Very rare. I do it, but not very often. But for me, I mean, that's one of my tools that I've learned, because what I've learned is that you start losing 1, 2, 3 days in a row, and you start taking overnights, and before you know it, for whatever reason, they don't work. Now you have 12 losing days in a row, which sounds crazy to say. I mean, I
yep,
think once I had 10 losing days in a row. I was looking at it, I'm like, what the hell? It's not a green thing in sight here. Everything's red. And you're like, how the hell did that happen? What happened? Because you didn't start over fresh and new. And now I learned that for me, starting over fresh and new works. That's one of my tools that I picked up along the ways of this happening. Again, and I want to stress this, okay? This is my journey. I am also on the journey of all you people that are listening out there that either, like I said, are new or been around for decades, 40, 50 years more than me, maybe. It doesn't matter. That everybody has their own journey, so to speak, their own path. We can help each other. I'm saying, the knowledge of people, listen to other people, and these interviews, TraderLion especially, can help each other. We can help you learn something that someone else. That's why trading desks are so valuable, because you get to kind of have an idea what other people are thinking. This is kind of like a huge trading desk, and people get to kind of pick the minds of people who they would normally wouldn't speak to. And I know a lot of people out there also are very into the technical part of trading.
hmm,
It's we talk about mental, but again, and I'll say it 1,000 times. Through my career, what I have noticed is when I am mentally sharp and I am mentally in the right frame of mind, I make very good money. I do very well, and I see things clearly. As a golfer, the hole gets bigger, the asphalt, the hoop gets bigger. And when I'm in a mental bad place, especially trading wise, and I feel like I can't win, and I feel like my confidence is low, I don't make money. It's that simple. I don't. So guess what? Let's try to keep those, to a minimum. And again, my trading style is a little different. I don't need to make money all the
yep,
time, because my mantra, so to speak, is that my winning days are always towards my losing days, so to speak. If you look at my P&L for over a year, my top 10 winning days will always be 30 to 40% bigger than the top losing days. That's why when I go 50-50, I do fairly well. That's my style. That's how I trade. Other people percentages, right? For those people, this will stay important because you have a 90% win percentage and you lose 6 days or 7 days in a month. Now you only win 58% of the time or 60% of the time, you're losing money. If you're 90% win percentage and you win 60% now, you're losing money because your losers are the good winners. That's what the higher percentage win is. Usually it's you win a lot and you win little, but you win more often, and you lose a lot when you lose, but you don't lose very often.
Right.
Well, if that shrinks and you're only winning 6% of the time, you're losing money. Mentally, this will help you. Same thing.
Yeah. And I just have one or two more questions, John.
Sure.
This has been really great. Speaking from personal experience, and I'll kind of ask my question at the end here, but when I'm going through a drawdown or a pullback, kind of the first step, as you said, is cut your size, trade less, all that. But then, for me, when I've kind of realized that I've stopped the bleeding and I'm trying to, move out the right hand side of the base, kind of the steps I've found to be really helpful is first, take a step back, take a break, a short break here, kind of reset mentally, almost, sell everything, just go to cash and, focus on the mental side. And then I kind of work on looking back on my trades, building a model book to study, previous winners, all of that. So there's kind of two phases there. There's the kind of let everything go, and then there's the get back to work part of things.
Right.
So I wanted to kind of hear your thoughts on that, if you experiencing something similar to there. Because some people feel like they can just kind of push through a drawdown completely and just grind through it, but that doesn't really let your confidence come back and let your psyche take a rest.
Well, yeah. Well, the old adage was if you play basketball and you shoot yourself out of a slump, right?
Yep.
Keep taking shots. That doesn't work here. That's just a way to bury yourself deeper. I agree with what you said, which is kind of like my 3 losing days in a row go flat.
Right.
So I think it's important to be able to let yourself miss stuff. And what I mean by that is that when you're not seeing things clearly, you're not trading well, and mentally you're in a losing streak again, losing time period. You can't be afraid to miss a trade. You can't have FOMO. By you saying that you want to scrub the books, get flat, go to cash, so on and so forth, you're going to miss stuff. That's okay.
Yeah.
Because you want to know something? Yeah, you may miss it. There are many times I miss enormous trades, but I wouldn't have made money on that enormous trade. So I'm really not missing it because mentally I'm not prepared to make that money. Now, you got to understand that people say to themselves, oh my God, I would have killed it. They made all the money. I would have made all the money. But the truth is you wouldn't have made all the money. And I'm going to tell you why. Because you're thinking as if you were trading well.
Right.
And you were in a winning streak. And you were winning. And you were and confident. Right. And you were confident. Then sure, maybe you would have killed it. But you're not in that place. You're in the bad place. You're in the fog. You're in the place where you're not confident. You're worried. You're concerned. You're over trading. You're under trading. You're chopping yourself up. You're skittish, whatever it might be. So guess what? That opportunity is going to come along. You're going to blow it. You might actually lose on it. So better off not trading it. If that's going to help you, start fresh and new. Your job when in a losing streak, I stress again, is to stop losing. If that means slow down, cut size, be selective, and trade. Like I said, for me, it's slower, but for some people, maybe who don't trade a little bit, and be able to slow down and start new. You are going to miss trades. It's okay. This is your journey. It's okay. There'll be more trades. You'll find one, and when you're in the right mindset, you'll hit it out of the park, and you'll make much more than you would have made if you're trying to trade yourself out of the slump, because that does not work. You cannot trade yourself out of the slump. I'm sorry. No. If you get extra aggressive when things are bad, you just lose more money. It's that simple. I mean, you just do. There's a fine line. Now, when things are well, you trade more, you usually make more money, but just like the law of diminishing returns, you have 9 cheeseburgers, the 9th cheeseburger doesn't taste very good. You don't, it's not as good as that first cheeseburger. I like cheeseburgers. And someone else might be vegan. I'm not. But again, there's a happy place.
Yeah.
So I agree with you. When you're trading yourself out of not use the word trading because I just said not to do that, but what I mean by that is getting yourself out of a downturn. Don't be afraid of this stuff. Like you said, start fresh, start new, release the bad juju. The money's gone. Don't try to make it back. Your job now this is day one. Everything before day one doesn't matter. Everything before day one doesn't count. Everything before day one is not your money anymore. It's some guy named Stan. He lives in the Midwest. Too bad. He has your money. It's okay. You'll get it back from somebody else. Or you'll create it, whatever it might be. But that's good.
Yeah.
Day one. And move forward from there. Begin anew. The last stage, right? Stage 1, stop losing. Stage 2, just put some profitable days together, profitable months together, weeks, kind of get back on the bicycle, get back on the train, get in the right direction. Stage 3, begin anew, use those tools that you learned from the drawdown to build another 7, 8, 10, 20, 50 years of profits.
Right.
3 steps. That's what it is. That's what it is. I believe it is.
Perfect. And Jon, if you had kind of one last piece of advice or wisdom that it could be trading related, it could be life related for everybody watching, what would that kind of be?
Well, I'm pretty big. It's funny because for me, I'm pretty big in the life aspect of trading. The actual, like I said, I had someone tell me who I respect very much that, I like to help other traders, teach them kind of what I know. And he made a comment. He's like, listen, you trade, the way you trade is unique. It's not cookie cutter. You take a lot of your talents is innate. You take a lot of stuff that it's hard to translate to others. I mean, I don't think it's that hard. I do, but for me, I just see it like I see it one way through my eyes, and I think every trader who has kind of their own style sooner or later sees things kind of like in the Matrix, sees things through their eyes.
Right.
I think the mental aspect. So if I had to kind of give you one parting note, would be that keep yourself in the game mentally. Okay, don't let your if you're having a hard time wear on you, and definitely don't let it wear on your outside life. And it's going to listen. I mean, making money is emotional. I mean, it just is. I mean, people can tell me all they want. Oh, I'm not an emotional. Oh, bullshit. Okay, if you're making lots of money and then you're not making any money, you're going to be emotional. Sorry, I hate to break the news to you. Okay, I mean, you may be less emotional than some. Some are more emotional, some are less, but you're going to be somewhat emotional. Keep it at the job. When you sign off for the day and you have time to reflect, maybe give yourself an hour, whatever long it takes you. Maybe you're in the office going through your journaling, you're thinking about the day, especially during the losing streak. This is very important because during winning time, it's you're kind of in good spurts, but during losing time, it's a little harder. Reflect. I don't want to say mourn because that's not a good word, but be cognizant of what's going on. Understand, where you are in your journey. Give yourself whatever time you need. Then when you shut the door and you leave your office, let it go. Let it go. Doesn't mean you're not prepared for tomorrow. Let it go. Enjoy your life. Say, have a nice dinner. You're married, enjoy your wife. You have kids, enjoy your kids. Okay? This is going to be here tomorrow. This is not going anywhere. The job is not going anywhere. There'll be a market, there'll be stocks to trade, there'll be things to do. Okay? Don't take the losing home with you because it's very easy. I've done it. And I think people told me they haven't. They're probably lying, or maybe they haven't lost enough, or haven't had a substantial losing streak. But it bleeds into your life. But if I can give you one bit of advice, and I think it would help, is that don't let it. Just leave it there. Leave it there. close the door, come back tomorrow, morning when you have your routine. Remember, you have the routine. Routine is important, especially in a losing streak. You have your routine, start again, day one, winning trade, one trade at a time. I promise, do the right things. I promise you'll be out of this slump that you're in. Before you know it, you'll be profitable and things will be great again. I'm telling you, I guarantee it.
Excellent. Well, thank you very much, Jon.
Thank you, Richard. I enjoyed my time, and I hope people, learn a little something and learn a little something about me. Again, anytime we talk about stuff, I'm more than happy to join you.
Yeah, I think was it maybe it was last year, or maybe it was in the interview that we did. We talked about risk, we talked about mindset. You like to talk about the unsexy part of trading, which is the important part of trading.
Yeah, because the truth is that without this, you're not anything you do doesn't matter. I mean, this controls everything, right? I mean, as people, that's what makes you make your decisions. And if that's not right, if that's not in the right spot that you need to be in, it doesn't matter how good you are, no matter what tools you have. Okay, you're not going to use them properly.
Right.
Yeah, you have the tools. Now, the brain makes you use it properly.
Exactly, but that's why it's so important. So,
Jon, it's definitely underlooked. There's no question about it. It's not like you said. It's not sexy. People will be like, "Well, I want to see the charts. How do you make the money?" Look. Honestly, there are 1,000 people out there going to tell you their systems. Okay. Personally, I think you can pick one that you find, somewhat intriguing to you that fits your personality, and then make it your own by putting your stamp on it, adding a little wrinkle that only you have, your flavor, your spice. That works best for trading. I mean, I didn't invent what I do. I didn't, I took,
bits and pieces.
I named Mark Drackman, who was no longer with us. He trained me in the mid 90s. He was a, incredible teacher in my opinion. And I took what he had and I turned it, and I used my special spice on it and turned it into my trading style. And people who I've helped along the way, they've taken what I've told them and they've made changes and made it theirs. It's got to fit you, right? Trade's personal. Whether you like it or not, being a manual trader is your personality kind of is part of it. There's no question about it. Unless you're programming a machine, in which case it's a completely different story altogether. Not for this interview.
Not for this discussion. No problem. Jon, again, I always enjoy talking with you. I think everybody watching can take away, a few bits of gold there. So thank you again for your time. Everybody watching, make sure to thank Jon in the chat. Leave a like down below if you're enjoying this, and we'll be right back with our next presenter. Thanks again, Jon, for your time.
Thank you, Richard.